Okay, so we're going to dive right into the Fibonacci course where we'll be covering exactly how to enter better risk to reward trades and trade the trend or trade reversals or spot reversals and enter on reversals based on a, well, relatively proven mathematical um, sequence, so to speak. So let's just dive in. What is the Fibonacci sequence? Essentially, it's a sequence of numbers that is like based upon the previous number. And in trading, the ratios that are generally used are 23.6, 38.2, 50, 61.8, and 78.6. And they're used as retracements levels. So whether that's trading a trend or on reversals, we can spot where once we pass a certain percentage level, and often that is the 618 level, there is likely a reversal in the markets. So why does it work? Now, you both have the golden ratio, which is this, which is also based off of the Fibonacci sequence. But additionally, we have, of course, people in the market that all trade the Fibonacci sequence. And although it is a naturally occurring phenomena that can be spotted with mathematics and physics in the physical world, the fact is that I think that a majority of traders or a large sum of traders are all trading the same levels. Wherefore, it is kind of a self-fulfilling prophecy of the fact that, hey, at this level, we want a buy up, or at this level, we want a retracement, and at this level, we want to see XYZ, and that would be then a self-fulfilling prophecy because so many traders will be looking at the Fibonacci levels to then sell or buy a certain stock or crypto at that specific level. So setting up the tool, essentially, if you set up the Fibonacci tool, these are the settings that I currently have on it. This is just my preference. There is the minus. This is a more advanced tool, so I wouldn't particularly advise immediately having minus levels on there. If you're just starting to put on your Fibonacci tool, just make sure you tick off these minus levels, like this one, this one, this one, this one, and these two over here, so that you get less confused, because the minus levels add an extra layer of advanced use to the Fibonacci tool, which is probably unnecessary for the majority of people just trying to learn the basic retracement levels, etc., that Fibonacci sequences can add to your trading style. So yeah, just if you don't want to push the limits of understanding the first time, which is completely fair, I didn't and I wouldn't do that if I were you. Just make sure you tick off the minus levels and just keep it to the positive levels of Fibonacci. So I want to cover shortly swing highs and swing lows. Essentially, what are these? They can be defined as what you can see here. You have a high in a trading level surrounded by a lower high, and a swing low, a higher low, and a low. And essentially from here you see a market reversal, and from here you see a market reversal, right? So you essentially it's kind of a peak, right? And these are usually the levels at which you want to anchor your trades, so your Fibonacci sequence rather. So you'll select the bottom of this and then the top of some swing high, or vice versa, and then you kind of have your Fibonacci levels set up. Then often the question is, do I use the candle bodies or wicks as well? So do you select the top of here, or do you select the top of here? And on the low is the same thing. That is very, I think, dependent on the type of trader you are and how you like to have your Fibonacci levels, or even like in that particular scenario, if you're looking at it. That's the thing with trading, is all kind of lenient. It's not set fast like rules that you have to abide by or you fail at trading. The fact is, it's kind of lenient. It depends on how you want to trade something, etc. So I personally tend to use the wicks and just really select the top and the bottom, just because if my Fibonacci level on the chart isn't perfect at the level that I wanted it, or I don't trade on that level and just instantly enter on a Fibonacci level, right? I think that isn't a good idea with whatever type of indicator or anything you add to your charts. It always needs confluence. It always needs multiple confirmations within your strategy to actually want to enter that position. Fibonacci can just be used as another confirmation at certain levels that you want to enter at. And often, for me at least, it is one of the most powerful tools to really confirm, like, okay, this is in fact a solid level to enter or exit a trade at, whether it's confluence with a order block, or confluence with support and resistance, or with some type of trend line. I don't put a lot of value or weight on any of those things individually, but once they all align in my trading strategy, it tends to be the fact that, hey, look, that is in fact a good level. So I use the wicks, and yeah, you can utilize just the candle bodies. So that would just be right here, right, or right here. You can utilize these and just avoid the wicks, because this, for instance, is a pretty large wick. Let's say you just don't want to pick that. That's fine too. That's up to you. Excuse me. So how do you pick good versus bad anchors, or good versus bad swing highs and swing lows as your anchor points to put your low and the high of the Fibonacci tool? And I'll show you guys all of this in practice here in a second so that it gets less confusing. It all comes down to choosing the most extreme ones, and that's how I do it, and that's has worked for me. Whether that works for you in practice is a different question. For me, that has always worked, just like when I pick my order blocks. If you guys want to see the order block course, you can also see that below. I tend to pick the most extreme levels because that's where I have the best risk reward, and I see the best results most of the time. And I think that in the past I've been rather greedy, so I tended to pick just whatever level I thought was going to be nice. And then what happens is that wasn't the good level to pick, because it's kind of a greedy level where you enter too soon or exit too soon. So I tend to pick the most extreme swings or the most extreme anchors for my Fibonacci level, for my order blocks, or for really anything I pick. Again, as it says, there's no one way to do this. Every trader does it differently, and we'll argue about the nitty-gritty details if you let them. We all use fibs differently. We all use order blocks differently. We all use support and resistance or trend lines differently. So how you trade it is up to you. This is just an introduction and a overview of how you can actually implement Fibonacci sequence and how to kind of use the tool, etc. So it's a very rudimentary explanation of everything. So again, good anchors are formed by swings and highs, swings, lows, right here. And yeah, whether you're using or fibbing or using Fibonacci sequence on different time frames doesn't really matter. It really works on all time frames as long as you select good anchors and aren't just like putting this shit on random fucking like candlesticks, right? It's just like you need to use the tool as it is meant to be used, and then you're gonna find nice levels either way, whatever time frame you use it on. I tend to trade higher time frames, so 4 hour to 1 day charts. So that's for me where I use it. And of course, the higher time frame you go, the more confluence there will be with other time frames. So that's why it works even better on higher time frames in my experience than lower time frames. But that is I haven't traded enough lower time frames to say that with absolute certainty. So whether you trade lower time frames, higher time frames, this should work on all time frames. Even in my experience, I just like higher time frame trading for reasons of major confluence. So the basic premise is using Fibonacci levels to identify where the price may retrace after going up or down. So you can essentially just trade the trend or trade a reversal with the Fibonacci sequence. And the way you do it is essentially you select your Fibonacci retracement tool and select the two levels, which are going to be swing levels. Essentially just select the bottom, select the top, blah, blah, blah. Usually the best entries are going to be the 0.5, 0.618 in a trending market. And the most shallow entry that traders tend to use is the 0.382 level. I tend to just look at these two levels to see for any type of like pullback or any type of retracement. I tend to use look at those levels for the majority of the time. 618 is called the golden ratio level. Just for extra information, if anybody ever refers to that, then you know what that is. And so essentially we're going to get into the chart and show you live examples. Like I haven't hand-picked any of these examples. I'm just going to go over the Bitcoin chart on the higher time frame and kind of just look what it looks like. That can take a long time because sometimes it'll fill, sometimes it'll be great, but we're just going to have to look at it together because I didn't want to pick it too yeah, I didn't want to hand pick examples for this one, since yeah, obviously I could pick the best examples, but that would be a little bit yeah, unfair, so to speak. So if we look at the chart here, let's start right over here, and we pick the last down move. So maybe we'll actually pick this one as a swing level and select it right up to there, right? So what you can do is you can press Control, that will magnet it. Hold Control as you're hovering with the tool, and it will magnet to the nearest candle. And I want to select the bottom here, and then you can do the same thing here. What you can do is you can go into settings if you prefer to do this. I think it kind of clutters it, but you can extend lines to right, and now your tool will be automatically extended across time to the right forever and ever, right? So I'm not going to do that. I like it just because I'm pretty accurate. I like to think with when I drag it out like this, I don't really need to use Control for this. And you can see that we have this entire rally, and once this rally is kind of peaked, so let's say you are trading it, right? So you always drag it from left to right, just for the record. You don't want to be selecting levels from right to left. It's just strange. You don't know the price action on the right the majority of the time, since this is new price action. Yeah, so what we can do is we can literally just select the replay tool and select, let's say we are over here. Now, of course, we don't have this price action as a top yet because we're still in price discovery mode. And essentially, I will play it at 10 speed. You start to do this and you realize, okay, look, this is a lower high, high, lower high again. So you could say this is the same thing as one of those swings that we spoke about in here. So if we go back, right? Swing high, you could say this is a swing high, and we can select the top of the swing high as our point of interest, and then we could say this is the swing low as an extreme level, and we just select right here. So now you'd be looking at an entry at either 0.5 level as a major level, the shallowest would be the 382 level right here, and then finally the 618 level, which is often a level people like to enter at, as well as kind of the turning point, right? So if price action were to have done this, broke under it, then this is the point that most people would say, hey, we just broke the 618 level. This is a major trend shift where we can see further downside in the future. But for now, let's just look at entries. Let's say 0.5 is the point where a lot of traders, this is right in the middle of the 382 618 level. So a lot of traders prefer this level. My bad, we are on this chart. So yeah, a lot of traders prefer that level to most other levels. We'll just go back to where we were. As a level of entry, due to the fact that it's like right in between, right? It's a nice level, it's 0.5, it's right in the half. So here you can see if you were to have entered this with some form of confluence, let's say on the 4 hour, you would have said you liked this as a support. This was kind of your support. You saw a strong wick here and you decided, hey, this looks good, let's enter post wick. So not on the wick, but let's say you enter there, or on this one, right? So you see this as an entire level of support, or whatever your confluence may be. Maybe there's a beautiful, let's see if we can have one on here. Let's see, maybe there's an MA, nothing that looks good here, but maybe there's something that in your strategy has confluence with this. I don't even use moving averages, to be fair, but yeah, so that's how you can kind of select these levels. And then again, the major level that most people are looking at as a kind of indication of a shift in the market, a trend shift in the market, would be the 0.5 level, 0.618 level as major levels, that if we break these levels, we have a shift in the market, probably to the downside, and we can continue to see further downside. And if we're in a strong trending market as we are now, and we do not see a solid break of these levels, then the continuation would be expected, so to speak. So in this case, we know essentially we are going to rally even more. And then again, you can use these minus levels as an advanced tool, as we didn't know, we essentially covered price discovery mode in this one, right? So we know that if we do continuously go up, that we have Fibonacci levels as well here. So you can see this formed as resistance. We had some resistance here. And yeah, so you can kind of use these levels as well. So we can say the same thing here as we just did, right? So this is the swing low. You just use that as a swing low, and you can see this somewhat of a lower or a lower high, a high, and a lower high. So we can select this as another swing point if we were so to desire. And then again, the 0.5 level could have solidified an entry or become an entry level for you if you use this with confluence, of course. And yeah, we see a rally continued from these levels. And once more, we can select again soon new fib level. Here we see a change of character in the market, but so you can kind of use the tool to select major levels. I'm going to exit. Yes. Right, and so you can select these major levels, and just to not have a replay tool because that's going to take too much time, we can select here 0.5, similar thing here as a nice level, 0.5 that we could have entered at, maybe on this swing to here, 0.5 and a beautiful retracement to 0.618 level, as you can see there. And I think this might be a beautiful example of a reversal. Yeah, I think not. Yeah, kind of. You can see that we break the 618 level here, and we can't confirm a hold of it, and we see that we get a further breakdown after we can't hold that 618 level, right? So you can see the attempt at holding it right here in this little cluster, but you can see that since we didn't hold it, we broke down further, we get a major breakdown afterwards, and we get a major trend shift in the market here, where we have this kind of the structure of a constant high and lower, a higher low and a higher high and higher low, etc. So you can see this here, right? We have a higher high, higher low, higher high, higher low, higher high, higher low, higher high, lower low than here. So we have a break of structure in the market. And that kind of coincides with this level of 618 that had been broken down. Afterwards, we saw a sweep of this low, and now you can use the fib retracement tool kind of in a reverse manner, where we are now kind of expecting the market to continue to the downside. Right, so let's say here we see again one of those swing patterns of but then reversed, right? So we can see this a swing low, or I mean a swing high of a lower high, high, lower high, lower high, high, lower high. So we can use that as a swing pattern. And of course, this is a pretty set low that we can select as a level to hold. I think another pretty way to use this is say, okay, we have this shift down, and now let's see how we can use the fib retracement tool in a reverse manner, so downward, so to speak. And we can see that on the way up, we have the 618 level that kind of holds as support, or if you inverse it, of course, as support. And that's just Alt plus I. If you press Alt plus I, you inverse the chart. And here you can see that essentially we'd be using the fib tool as a bearish tool rather than a bullish tool. But in a similar way, it's a pullback upwards before a down move. So you could have said, hey, look, I think this is a trend shift in the market, as I stated. And then you use the tool rather than always from left to right. Still, we remain from left to right, but rather than from a low to high, we are using it from a high to low to see what levels might be nice. And here you can see that 618, essentially, even though we had a SFP, so swing failure pattern under that level, we still had a retest of the 618 before we had a breakdown further, right? So it would be exactly the same thing as we did here, but then inversed in a bearish manner rather than a bullish manner. And then again, just to draw that out once more, right, you can see the beauty of this retest before a major breakdown that essentially ended perfectly at the -1 level here, with a double retest of that level right here and right here, which is essentially perfectly on the line before continuation. And you can kind of continue to use this fib level wherever you please, however you please. I don't know if we want more examples, but essentially you get the gist of what this will look like, right? And you can use the same thing here. And now I'm selecting this level right here and this level, and you can see that the 382 level served as a proper resistance for a while up here as the new kind of range was formed. Now, you can of course draw this however you want, right? That's the nuance of it. The fact that a lot of people would say that TA, Fibonacci sequence, etc. is woo-woo. I understand. I just think that if you have enough confluence and your strategy works and you've tested it within your strategy, often it is quite a useful tool. Again, here you can see the same thing happen in this entire pattern. Again, this is a swing high, right? A lower high, a lower high, breakdown of that, and then a retest at the 0.5 level. So we select this, retest 0.5 level. If you want to enter here, you would have had a great trade. And then we can see that with those minus levels that we've had marked out, let's just make sure this is practically perfect. And we can see that the 618 served as a strong resistance level. As we said, 618, 0.5, 786, 382, these are all amazing levels to be looking at in your Fibonacci sequencing. So yeah, this was a perfect resistance to see further breakdown. And so you can kind of see that whether you decide to use order blocks within it, or trend lines, or support and resistance, and you mix it with Fibonacci sequence, that there's going to be a lot of confluence you can add to your trading strategy. So that's just a short introduction to Fibonacci sequences. We'll just go on to the end here. So again, how I use it, to each their own. So how you use it is independent from how I use it. And I want you to maintain like a strong stance within your own strategy. And when you add new things, make sure it fits in, make sure you understand it, make sure it feels right within your strategy. My preferred uses are 1 day to 4 hour Fibonacci levels based on swing moves. So those are major moves, not minor moves. So it's not going to be like, I won't be fibbing this, you know, to see for something, for some type of lower time frame entry. Now, if you want to look at the 1 hour and you trade a lot of 1 hour charts, then of course you can decide to use this as some type of fib tool. If you want to maybe this, you know, as some type of entry, a 618 short, or right. So you can always use them. I just tend to use on the 4 hour and 1 day charts. I tend to use the fib level. So if anything, I would be looking at this for what the strength in the market looks like, and some type of retest of either of these levels for an entry long, something like that. Now, I'm not looking at that at all, and there's no confluence because I'm not really looking at anything else, but that this could be something, some way to use it. Again, I never trade Fibonacci levels on its own. That's weird. It's kind of strange to select one part of your strategy and be like, hey, look, I'm going to fucking all in on this trade because it just hit the 0.5 level, and that's it. Right, that's not how you trade. Nobody trades like that, or I hope not. And if you do, then start looking for new ways to trade and add new things to your strategy and kind of amalgamate a bunch of different things from different people to add to your strategy. That's how I've done it. I'm going to make a video completely on how to create your own strategy soon, so that'll be out also this week somewhere. And I personally pay the most attention to the 382, 0.5, and 618 Fibonacci levels, also in minus, so that you could see that earlier where I decided to use minus 618, where was it, as a resistance level. It must have been here, I think, when I drew it out. Oops, whatever, we'll just draw it out like this. When I use 618 on the daily time frame, not on the 4 hour. As a resistance level right here, right? So I use the same levels as I would use in the plus, in minus as Fibonacci levels. And I trade swings, so I use higher time frame charts, as I said here, in a 1 day, 4 hour. So that's about it. That's kind of the introduction to how to use the Fibonacci tool and what it is and how you can add it to your strategy. I think that the best ways to add it are see if there's confluence with your other indicators or with your other strategies or with your other like things that you trade with, right? So whether that's support, resistance, trend lines, RSI, whatever it may be, you can use the Fibonacci sequence as something to add on to there. It's not a long process to add a fib level or fib retracement tool to the chart. Maybe like, oh, okay, yeah, that also is confluence, or maybe it's point of control, some type of order flow trading that I also use. I use point of control, etc., to mark grade levels, and often the fib levels will be perfect levels in confluence with, you know, higher time frame point of control, etc. So that's essentially it. Feel free to join the team. We have a free Telegram where I do post some trades, etc. And there's free newsletter access. So if you just go down to the bio, there's going to be a link to sign up for the newsletter where I send out weekly macroeconomic reviews of the situation, kind of what I'm looking at and what would be important for you to look at if you want to trade on the right side of the market instead of just like random chart analysis without any macro understanding of what's really going on. And then soon I'll be releasing the full trading course where you get premium newsletter insights, which includes more actual analyses of exactly like what happened at what bank, etc. Premium Telegram trade ideas where I'll actually be giving you trade ideas. So that's not just like hindsight things, but it's actually live, like, hey, look, I'm looking at this trade right now. And of course the in-depth full trading technique course where I go into exactly what my strategy is and how I become profitable in the markets. Finally, disclosure, this is not financial advice. It's just me talking about my strategy, my advice in trading. Well, that sounds kind of counterintuitive, doesn't it? Well, it's not advice. It's just me talking about my experience in trading and kind of how I do things. And it's mainly for entertainment purposes and kind of just growing out the expanse of trading understanding for people that really want to start trading. And yeah, kind of hoping people don't lose money. You know, just me spewing my ideas so people don't lose as much money as they otherwise would, hopefully. Finally, visit me on Twitter, where I actually post a bunch of like random trade ideas and all this stuff without like any premium access. So that's like the best way to steal some great info. So yeah,